Okay, folks, welcome back. This is our midweek review for October 23rd, 2019. This is our daily chart for the dollar index, and let me get this scrunched down here so you can get the full picture. All right, so we mentioned last weekend ahead of this balanced price range in here because we've had a lot of back and forth. Even though we have a sell-side liquidity pool here, price hit this after hitting the volume imbalance, closing that in. We had a little bit of a retracement, which is reasonable. Here's our fair value gap, and institutional order flow entry drill tells us that we have to look for 97.37 as a minimum upside so we can see a continuation there. It doesn't need to fill that. Okay, preferably I'd like to see that stay open. Okay, and if it does stay open, we could see hopefully an erosion moving lower here and eventually eat into this balanced price range and as a high resistance liquidity run. Okay, so this was a low resistance liquidity run for these equal lows. Now this is a high resistance liquidity run here. Now if we get below these lows, then this low here becomes a low resistance liquidity run because this is all inefficient price action and another volume imbalance. Okay, so below this low here, we have these lows over here as well, but that's pushing it out. Right now we got to see if this in fact does allow price to move lower. Okay, so the high came in today at exactly 97.37. This candle's high 97.37 to the pip. Okay, so this weakness on the dollar, I'll talk about that in regards to the dollar CAD when we wrap up this video, but that'll hold this midweek's teaching. But we're looking for continuation. Hopefully tomorrow we'll get that ECB related Draghi's last speech apparently is slated for tomorrow, so we'll see what kind of jawboning he does for the euro. Anticipating upward movement on euro, which would be weakness on the dollar. Speaking of euro, we had very similar things just in mirror image. We had our fair value gap here and the low on this candle 111.14, so it needs to trade down to that low. Obviously you can see without having to do any reference like that, we went down to 111.05 and a half, so that's enough to capture a long and look for a continuation on the upside. Buy side liquidity pool resting above here, and then we would be looking to try to press into this buy side liquidity pool. Now again, this is a balanced price range here, so this is going to be a high resistance liquidity run to get up here. We don't require it to trade all the way up to that point or up to here to get first profit. That's the main takeaway. It's problematic for a new student to hear me say this is a high resistance liquidity run. It just means that it's going to take some time and you have to be very patient. If we do trade above this high, it will most likely not be a direct run in here unless Draghi fuels it with whatever he says. Okay, so when Draghi says whatever he's going to say, the central banks will use that as a reason to reprice. Hopefully we'll see this run to that. Okay, if it trades lower, we'll be looking for this fair value gap to fill in. Okay, so all this buy side imbalance should rebalance if we give up today's low. Drop down into an hourly chart for euro. Okay, so we have a buy side liquidity pool resting here and a buy side liquidity pool resting right above this wick here. So it's really the equal highs that's got my attention, and then the bearish order block as well. Price has shown a willingness to want to rally, taking out sell side liquidity here, rallying, come back into an order block and expanding up. I'll drop into a 15-minute time frame. So you can see we had a fair value gap in here with an order block. Price trades back down into it, rallies away, another return to an order block, expansion. Now look at the fair value gap in here. We trade down to that and then the explosive run higher. Now this bearish order block, I want to see it trade through this, especially through the mean threshold with speed. I want to see it trade through that aggressively and get north of these equal highs. And I don't want to see it just go up and then have any kind of rejection. Like, you don't want to see this type of reaction once it clears these highs. And I should say, if it trades above these highs, we don't want to see this type of action. We want to see it gun through it higher and expand, okay, and start to see price spooling, reaching up higher into that 111.80, 111.90, and then that would leave us a run tomorrow during ECB for a 112 big figure run, which would bring us another 40 pips if there's enough of a reason to do so. I'm not saying it's going to be 1240. I'm just saying that that's our normal protocol, okay? But we would be looking for, if we get the run up into 111.80s, 111.90, and ahead of ECB, I would expect ECB Draghi's talking to send it above 112 big figure. That's what I would anticipate, but obviously we have to see what price gives us ahead of that. We do have a little bit of an imbalance in here. If we do trade up to the bearish order block and then sell off, we could rebalance to this price point here, and bearish candle would be a bullish order block in this regard, and that could potentially send price higher. I'd like to see it leave this here personally. I don't think it needs to come all the way back down here and rebalance that. It looks like it's trying to price in a premium ahead of ECB tomorrow, so we'll see. Cable doesn't really have a fair value gap in here to speak of, because we've had a rebalancing in here, but similar fashion, we traded down below previous day's low. We're looking for, this is not really anchored to anything. The only thing I did was just draw it onto here, so don't let that confuse you. I'm just noting that this is the next level. So when I drop into the lower time frame, hourly and 15, you'll see that it's just this high that I'm annotating, okay? But the longer term, intermediate term draw on liquidity is the buy side liquidity pool here, and we'll look to see if it wants to make a run for that. Now, obviously, it's probably going to be very sensitive to whatever Brexit hoopla comes out. Okay, it's always something, either it's going to happen, it's not going to happen, they vote it down. Look, I don't understand it, I'm learning it just like you are, but I do believe that price wants to draw back to here before it takes out these lows. Okay, so where are we at right now? Reaching here. Now, why am I interested in here, and why am I suggesting this as the intermediate term draw still? Because large funds have shorted back here, and they're not in the business of trailing their stop loss very tight because they have a very large time frame model where they have to allow a lot of this retracement. This is not concerning to them. You and I would be like, man, we're in some serious jeopardy here. Large trending models on a large fund level, it's completely objective. They use a completely different model, and their stops would still be up here. I know it's hard to rationalize that, but that's the way it is. They can't be managing and worrying about getting stopped out prematurely because their models are such a long-term macro view. All right, so let's drop into an hourly chart for cable. All right, and you can see we had a liquidity pool here. Small little imbalance here, not much, but we have order blocks as well. Trades down to that, and then we had a little bit of excitement thus far. Be mindful of this low here, 129.30, and we probably will hit that while I'm doing this recording here. It's 3:25 my local time, and like I said, that low 129.30, we want to see it trade through that and smash into these equal highs, relative equal highs. And again, remember that daily line I put on that wasn't anchored anything to the left? It was just annotating that old high. So I want to see it trade above these relative equal highs, attacking that 130.20 institutional. 15-minute time frame. Don't have a whole lot on this one because everything was already outlined via the 60-minute chart. But this right here is important. We had the open on this candle, traded all the way down to the low here, and then came back up. Now watch what happens. Think about this now. We opened here after running stops. We traded down okay, and then come all the way back up. That's 2 times price has been offered just in this one single candle. Okay, then we have the next candle open here and trade all the way down again. So in between, now this is really important, now watch. In between, well, we'll just outline it from here. And this is probably not the best color, but let me see if I can make it a little bit better. This should do it. Yeah, it's well, at least it's for me. It may not be for you, but I apologize if it isn't. All right, so what we're looking at here is the range, okay? Now, why am I highlighting the top of this? Because that's where the open of this candle is and traded down. If we were opening on this candle lower, okay, and or made a high lower than this candle's close, then I would obviously have the rectangle highlighting that point down. What I'm suggesting to you is study the fact that we traded down on this candle and then back up. Right away, that's rebalance. Okay, it's already rebalanced. It came all the way down here and then came right back up. That's immediate rebalance. This candle here opens and trades down again. So from this candle's open and into this candle as well. So between these two price ranges, I guess it's easier if I just do it like this. From this price point to this price point, we had back and forth, okay? 3 times prices passed through this range of 129.76 and 129.6. So we had a 70 pip range traded back and forth inside of 30 minutes. This is balanced, okay? Most other traders that think they understand inefficiency and efficiency would not see that as balanced. It is. So what does that mean? What is the takeaway from that? The fact that we're already trading up into it here indicates that this is underlying bullishness, okay? There's no reason for price to reach up into this unless it wants to go higher. Get that? Think about it. Why would price need to come back up into all this? Because it's already efficiently traded there. So it's wanting to eat into this balanced price range for the buy side liquidity pool resting above these highs. Okay, so I don't believe that we made the weekly high yet. That's what I'm basically getting at. Now I could be wrong, but I don't think that the evidence here supports that the weekly high is in. And so just this is a point of study for you to see how we engage as we go higher. Does it roll right on through that? Because if it does, wow, we are really bullish, and I'm really interested in those daily objectives on pound. All right, the last bit of business, and I'll wrap this video because I don't want to do it too long. This is the dollar CAD, and obviously we've had a bearish bias relative to its daily chart, looking for lower prices. At least that's what I'm looking for. The draw on liquidity is that lower sell side liquidity pool on the daily chart, and I'll show you that in a minute. But right now, I want you to look at the price action here, and you're probably looking at something that doesn't have a whole lot of clarity to it, but I want you to think about some of the things that you've learned in the last couple months. Just in the last couple months, the lessons I provided, I point, you shoot. Okay, that's the motto here. Okay, I'm giving you my experience, and then you go in and you practice. Now, if you can't do these things live, that's fine, but you still got to go back into the charts and annotate them. So I'm going to show you what my personal journal entry looks like. Okay, I don't do this a whole lot because I want you to do these things because they have to be personal. They have to be in your own language, in your own drawing. Okay, none of this stuff is in an MT4 or MT5, indicator. Nothing is click and plots. It's all hand drawn. Some of you are insisting on seeing the MT4 indicators work on MT5. I don't have anything for MT5, and I'm only using MT5 demo with Ava Trade because more or less they forced it on me. So eventually when this one expires, I'm going to go into the MT4 again and we'll go back into that. I wish they would have their MT4 show the time frames, because I think that's what everybody's been emailing me about. They want to use this one because it offers multiple time frames. Okay, like the time frames here, you get multiple minute choices, and then over here the hourly time frame, it gives you multiple hourlies, and I think that's it. But it's it is what it is. You're not going to be able to squeeze the MT4 indicators into MT5, and I don't have MT5 indicators. If you've seen recently in the last year and a half, I have not been using any of the indicators, and I've done that to try to show you that there is no necessity for them. I wish, in my, reflection on how I've been doing this mentorship, I really wish I never would have even brought them into the mentorship. I just wish I would have never used them, because they're really just a distraction and they're a nuisance. You think they're going to help you, and they're not, okay? Because you can take about 10 seconds to draw the very things that these indicators would do. They don't tell you anything, with the exception of average daily range. But average daily range, really, you don't even need that indicator either. It's just one tool, but something that you would have already understood anyway because of institutional order flow. If you just use average daily range anyway, you're going to leave a lot on the table most of the time. So don't get so hung up with, I got to know where the MT4 indicators are, because they're on month 12. Okay, they're linked in the MT4 12 month, and they're all in a zipped file. So that's where they're at. So you got to get to that point to get to them. And again, you don't need them. Okay, have you been seeing me use them in the reviews? No. Are you seeing me use them in the commentary? No. I'm telling you how to read price without all that stuff. Okay, but if you want to use them, whatever. I don't personally use them. Okay, but it is what it is. With that said, I want you to take a look at price action in here and see if you can get some rhyme or reason out of what has happened today. Now, again, the focus was last weekend, before the weekend before this week started trading. The premise was weakness on dollar CAD. Okay, I mentioned on the daily analysis for the dollar, we were trading up against a high resistance balanced price range, so it ain't going to go down in a straight shot. Okay, you're not going to see this big range continuation. That was the whole context of what I said. Okay. It's important that you take the things I say and balance them within the context. I'm not saying, because I'm bearish on dollar CAD, that every single day is going to be a down day or large ranges. Okay, it just means that we have to wait for reasons to go short, and I'm going to show you how this was today. And vice versa, just because I'm looking for a dollar to go lower, it doesn't mean it's going to be straight down days. We've already had that last week. Large ranges bring small ranges, and we're up against that balanced price range on that daily chart for the dollar, so it's reasonable to see it retrace. What did it retrace back to? Institutional order flow entry drill. Okay, that fair value gap. All right, so now with that said, I'm going to get into the business with this and wrap this video up because it's already too long. All right, so we're going to go into the teaching portion of this. Okay, and this is what my journal entry looks like. Okay, I do this by hand. Okay, in my journal, I sketch this out so it looks much like that. Okay, I don't draw candles. I just draw a rough idea what price is done, and then at the high right here, I'll just annotate what that high was, and the low, which is over here that you can't see because it's not in a candlestick format. The low would be over here that I'm annotating, and it's just a rough sketch, and then I'm annotating where certain PD arrays were. You will not get anything from my journal entries. It's because I've been doing it like that for 20 plus years. You're never ever going to see it or understand it, and you won't appreciate it. This is the format that you want to do. Okay, you're going to be more comfortable with this because this is how I actually teach it. I don't need to see the candlesticks. I don't need to see it look exactly like this. But if I were ever to go to full digital and do just this format, this is exactly how my charts would look. This is exactly what my journal entry chart would look like. Okay, it would look exactly just like this. Now, once you have everything annotated in your chart, like for instance, say you just got home from work, okay, and you're now looking at the markets like we're seeing it live right now. Say you were sitting down at the time. You would dress your charts up like this. Now, you're welcome to use this one because I'm not going to do it like this every single day, but this is what my specific views on price and what I would have in my journal. The things that are salient, the things that are important, and also it is something that you can reflect on later in the week, like this coming Saturday when the markets are closed, and we go back and look at price action and study it. And I tell you this, I usually prompt you all by way of Twitter, saying, look, it's Saturday again. This is where we go back and look at all the, what are you doing? Well, this is what you're doing. You're looking at what price has done on an individual day-by-day basis with your personal annotations. Now, over time, you'll become more refined about what you're annotating and what's important to you. But for me, these are the things that are important, for this particular pair. Now, I'll outline it, go over it real quick, and then I'll go up to a 15-minute time frame and then drop out to a daily chart, rather, and move off of the 5-minute chart. But this is what I saw today. I did not engage with it. I just watched it and more or less paper traded it. So I didn't even do a demo execution, just watched it. Here's Asia's high. In other words, it's the initial high of the day. And then here's the low that was formed in London. All right, so what that is that's your initial intraday dealing range, and the equilibrium is right here. Now, you don't see it, but this is what this is annotating here. Where those letters are, just draw that out in time. This delineation here, this vertical line, is the beginning of the New York kill zone. So New York kill zone is basically the model that I taught for the gold model. It's in August, and I also just tweeted recently, one of the members asked where the gold model was. If you just use a search feature of our ICT Mentorship forum, if you type in what you're looking for, generally it's going to get you where it is. If it's something that's used a lot in terms of like, if you say like weekly or things like that, it's going to give you every possible scenario. So you try to be as specific as you can looking for something, and I try to do my best when I'm adding a specific lesson to the bi-weekly, no, not bi-weekly, but the midweek and weekend editions of our commentary. I try to use very specific terms, so that way if you ever need to find it, you just go into the search option at the top of the menu or across the forum heading and type in what you're looking for, and it generally will give you it'll get you basically all the links that would take you to it. You may have to look at a couple different things to find exactly what you're looking for, but that's the best I got. So it is what it is. All right, so this is the initial high of the day, London low, and then we traded sideways, and we went into more or less a seek and destroy into New York. All right, so New York rallied up. As it rallied up in here, I was thinking as soon as it hit this high here, that was a short, and it ended up coming all the way up into a 15-minute fair value gap, which we'll look at in a moment. But I watched it trade here, and I would have had first target or scaling right below this low, because that's the initial impulse. After London was taken out here, New York starts it by running the stops below here and then sends it higher. This is exactly what I teach for one of the setups for London Open. If you're bearish, okay, if you're trading within a bearish daily institutional order flow, many times London will do this very thing. This will act like Asia, okay, where Asia's back here. This could be Asia, okay, viewed the same way. Runs lower, gets traders caught short or stopped out if they're long, and then they send it higher, running the liquidity above here. Now, initially, my line that was here was here. But after this high formed and traded back down, I raised it up to here. And then it rallied one more time into the 15-minute fair value gap. And what I'm annotating here is buy side liquidity pool. That's where the smart money is selling. So they sold here. And where are they going to look to pair that up with? Equal low here, here, and here. So below these equal lows, there's sell side liquidity. I did the first scaling of 5 pips, so it's a 5 pip grade sweep. And then a little bit lower, you can see this is Tuesday, the 22nd daily low, and I'll scrub back here so you can see it. There's the low. Okay, so that's yesterday's low. and that's drawn out in time. Now, for my charts, I actually have the annotations, like here it says previous day's low, but you wouldn't see that if you printed this out digitally. So you're going to have to add these types of annotations on it, even though you have it here. So if I drop out to a an hourly chart, this line will be important because of Tuesday's low, but I may not know exactly what this level is unless I hover over top of it like this and it tells me it's previous day's low. Now, I'm only doing previous day's low here because I'm showing you this lesson here, but you want to be very specific, and you would have like a Tuesday, the very date, October 22nd, 2019, daily low. So that way when you hover, it'll say that. But because I'm teaching and the scope of our discussion is just yesterday, you want to be very specific, not just vaguely saying previous day's low, because if you always use previous day's low and you're leaving those lines in, think about it. If you're doing this next month, we may be trading at this same level again and you may get confused. So you really want to be very specific if you're going to dress your charts up with this. And again, just for completeness sake, because I know some of you are new and you're going to be asking me or feeling the impulse to ask me how this is done. You go into properties, and where it says name, just type in what you want that line to say. Okay, so that'll be your tag. And once it's done, you just hover over top it. There it is. Same thing here. This blue line here is the 15-minute premium fair value gap, and it trades up into that. And I'll come back to that, I promise. We're going to go up to a 15-minute time frame in a moment. But the buy-side liquidity pool, they run that here, and this is your typical Judas swing. This is what you would see in London when it's bearish and you send price above the Asian range high, this is not the Asian range high, but because the algorithmic characteristics are similar, when we go into New York Open, if you're bearish, you want to see it trade back up to at least the equilibrium of what has been shown here, the initial intraday dealing range. Okay, that's the high and the low. I just talked about this, I think it was last weekend. If it wasn't last weekend, it was Wednesday. In other words, in the last two videos, one of those videos, I talked about how you can use that. I'm almost certain now it was just past weekend's recording, where I showed you by using the fib. This is what you're seeing, the fruits of it, basically. Right there. Okay, so I'm highlighting this low and this high and equilibrium that's laying right over top. You can't see it, can't read it, but let me scrub it over here. There you go. You should be able to see it now. Right there. So equilibrium at 130.97. So you want to see price trade up to that at minimum for short. But if you're going to see it trade up to that in New York, so what's all this though? They're equal highs. So is it going to just go to equilibrium and sell off? Probably not. Especially if we had all these back and forth, intraday highs and lows being swept. They're going to send it to a premium. Well, we got to go above these equal highs first. And if it goes above that, how high can it go? Well, we have this little area where it's too clean and smooth, equal highs in here. Now watch what happens. I'm going to take this fib off though. If we go out to a 15-minute time frame, look how obvious this is. See that fair value gap right there? Boom, hits it. So it goes up into that premium array, and then let's go back down into the 5-minute chart. After it hits that, closes it up perfectly to the pip. We trade back down. Distribution. Small little return back to the last up close candle here. Trades lower. This is an immediate rebalance. We just talked about that as well. Then we create another fair value gap. Let me zoom in just a little bit on this one. Sorry that my bones are cracking. I'm an old guy now. So we have a fair value gap here. Price trades right back up into that again. There's your secondary entry for institutional order flow. So you could sell short here or sell short on the rebalance here. Immediate rebalance, deferred rebalance, fair value gap, and then price trades down, creates another fair value gap, and look close, balanced price range. what makes this a balanced price range between here and here? Price trades up here, and then price trades down through there. Two big single candles, okay? When this occurs, price will have a very hard time trading back through that. So that's why we see this here. Doesn't completely fill it in, goes up into it here, goes up into it again here, and then it gives up the ghost and goes lower, okay? That's what that balanced price range annotation is there. Now I'm going to zoom out because I'm a little too tight for my likings. So price sells off again. Small little consolidation, returns back to a breaker, which is right in here. Sells off again. 5 pips below equal lows. So we have our 5 pip grade sweep, which is the bottom of that rectangle here. We hit that here. And then it trades right back up to what? The level that would start that liquidity pool here. Here. Sweep above it a little bit in here. What's it doing? Volume imbalance. See that? We have wicks in here, but there's really no bodies. Trades right back up into that and then goes lower and hits previous day's low and just a little bit below it. And now we're hanging inside between the range here and here. So this is what's creating this dealing range now, these levels. So this is what a typical journal entry would look like for me. Now again, my journals are personal. They're very personal because many times I'm going to have things in them that I don't want you to see. Okay? There are going to be things in there that are basically reflecting on my personal life. You know, if I'm stressing about something, yes, I do stress. Sometimes my children are sick. My oldest son, he has to have surgery several times a year still. Those things may be in my journal. Or I'm anticipating something that is, has me a little bit more excited and animated than I should be. Those things will be in my journal as well. So just from a price action standpoint, what my journal entries would look like is basically just like this. Okay, so I wanted to provide it today because it was something I did as a paper trade. I did not demo trade it. I could have very easily went in here and told you I sold short here and covered down here. There's no reason for that. I want you to see what it's like to do this. If you can't be in front of the charts live, what you take away from doing this. Okay, and if you collect, I promise you, if you collect a month of this, doing this, just with one pair, you're going to learn so much about what it is that you like about price action. Where in here is your ideal setup? Because you may not have the moxie to get up in here and sell short, and that's okay because you're learning, you're new. But you may come back down here and say, okay, well we're at a breaker. Okay, we're at a breaker here. We could, if we trade back to that breaker here, which it opens and trades up into it here, that could be your short. Now this is a 5-minute chart. This is completely different on a 1-minute chart if you're down there scalping and practicing on that time frame. You could trade into the balanced price range or use the consequent encouragement between the top of the gap and the low of the gap, and you would be short somewhere in here. Not even referring to the balanced price range. It's just one more detail behind it. It's just one of these things that help you understand when fair value gaps or liquidity voids don't completely fill in. If they don't completely fill in, it's because it's anchored on a balanced price range. Okay, and I talk about that in the core content too. Or, you may need it to trade back up to the bottom of that balanced price range, and that could be your short. Okay, and your stop would have to be above the fair value gap here, not just here because it's too tight, way too tight. So you have to use this high back here, and that would be your entry here, and this would be a little bit of the drawdown you would suffer. And these are types of things that you would include in your journal entry. If I would have used this model, selling short here at the bottom of the price range that's balanced here, if I sold short there, I would have had, let's look at it. The high on this is 130.89. So let's say you went in at 87. Okay, so you went in at 87. And 87, and the drawdown you would have incurred on that would have been 3 pips. That's tight. That's really, really tight. So to have 3 pips drawdown using that and then seeing it move in your favor, you could write that in there and say, okay, I saw a short. Now, you're not seeing this live if you did this after the fact and you're coming home and you're doing this from a hindsight perspective. But in your notes and in your annotations, you're going to say, I expected price to rebound here and sell off, having a stop above here. My position only suffered 3 pips drawdown. Now, are you lying? I guess in a way, but I've already told you this. It's conditioning your subconscious. You have to do this, folks. Okay, whether you like it or not, it's not a moral wrestling match. Okay, I believe in God. I don't believe it's lying where it's hurting you, and you're not hurting anyone else. It's just internal dialogue that you're conditioning yourself. You're doing these things with the expectation that it's going to be retained in your subconscious, so that way, when you're in the heat of the moment, you're watching price live, you will reflect on these things and your subconscious will cue them up because of memories, and they're being programmed as memories, but they're not. They're false memories. But because of repetition over and over and over again, your mind will see it as, well, you've been here before. You know what this is. And it will remember your annotations, the very things that you say. That's why I tell you not to have anything emotionally charged that's negative. Don't say, oh, I missed this one. Oh, I feel stupid. Oh, I missed this one. I wish I wouldn't have missed that one. You see the difference between that and saying, I seen and anticipated a reaction here, and my stop loss never really had any risk, and only moved 3 pips against me. You're conditioning your subconscious as if you were actually in that trade. You were in that trade, and you've seen it coming, and when you do this, I promise you, you're going to get a level of understanding and be able to recall price action that you really didn't trade before, but you're going to have that pseudo experience. So your mind is tricked into thinking you've been here before, so it helps alleviate some of the anxiety and fear, and you will remember. You won't feel it most of the time initially because you'll still be excited about seeing something pan out. But over time, you're going to start feeling like, yeah, I've done this a lot of times when you really haven't yet. So it's a really interesting way of studying. And you can do this with other things, not just the way I'm teaching price action. But you can really condition your brain to do a lot of things that you would really otherwise not expect it to be able to do. It's very powerful. God's given us a really incredible device between our ears. And most people aren't really skilled enough to use it. At least not to its full potential. And I'm not claiming I can. I'm just saying I just know how I can do it to make my students pick it up faster. And this is what I did with myself. Okay. So anyway, hopefully you got something from this one. And I will check with you guys on Twitter tomorrow by way of any announcements coming in the ECB related Draghi jawboning. And if there's anything to talk about, we'll obviously, I'll point your attention to it. Until then, good luck, good trading. I will catch up with you this weekend on our Friday night weekend edition.